trading is execution. What you decide to do, of course, is analysis. And the problem is that it depends on what you're using your analysis for. If you're using your analysis to avoid the risk, then certainly making money is not a function of that, because you will virtually consistently lose. The more a trader learns about the nature of the markets, the easier it will be for him to execute his trades. Who thinks there's a correlation there, that the more I learn about the nature of markets and price movement, the easier it will be to execute your trades? Who thinks there's a positive correlation there? Okay, again, couldn't be further from the truth. There's a negative correlation there. The more you learn, the harder it's going to be to execute your trades. It depends on why you're learning it, of course, but we'll get into that. To be a successful technical trader, you have to determine what the market is going to do next. When you're trading from let's say, the perspective of, it doesn't really take anything to win, then there really aren't any mistakes that you can make, because anything that you do could result in a winning trade for any reason. But when we're talking about making consistent money or an income that we can rely on, then everything changes about this. Everything changes. What I'm talking about here is I'm talking about these 5 or 4 broad skill sets to be able to create consistent results, the kind of results that you can rely on as an income. You're going to have to learn an edge. You're going to have to acquire a trading methodology that gives you an edge. I'm defining an edge as that there's a higher probability of one thing happening over another. That's what an edge is. And we're going to learn the nature of probabilities here in a moment. You're going to have to have, have a plan on how you utilize that edge, meaning what the risk is, position size, and profit object. Then you're going to have to be able to execute. You're going to have to get to the point where you can execute that edge without making errors. For you to be able to execute that edge without making errors, you're going to have to learn how to trade from a carefree state of mind, meaning you're going to have to aspire to the point where you can trade without fear. And to trade without fear, you're going to have to learn how to think in probabilities. That's basically where we're going here. And I said this primary skill was learning how to trade without fear. Learning how to trade without fear is a function of learning how to think in probabilities. Meaning we're going to set aside or move from thinking in a trade-by-trade mentality. In other words, what this trade is going to do for me right now, am I right or wrong on this trade? And we're going to move to a series of trades perspective, because that's what your methodology does anyway. Any trading methodology just gives you a win or loss ratio over a percentage of trades. In other words, if I take the same criteria that's in any kind of technical formula that's mathematically based, or a technical price pattern that you would be able to see visually, what we're going to learn is that my edge, meaning a higher probability of one thing happening over another, is simply going to give me a higher win rate over a series of trades. If I'm going into a situation with a certain belief that, let's say, that my particular edge is going to tell me what's going to happen on this trade right here, I wouldn't even put this trade on unless I thought it was going to win. When you really understand the nature of price movement, which is what we're going to get into after we go through this section on skills, when you really understand that, you will never think that way again. When you really understand the nature of price movement, you won't think that way again. And that is one of the biggest problems that the typical trader has. Let's say the typical screen-based trader is that they really don't understand the nature of how prices move and the underlying dynamics, because you haven't had the exposure. You haven't had the exposure to the direct markets, to every experience in your life that contributed to a positive sense of self-valuation, that yes, I am a worthy person. Because what we're running into, I kind of got ahead of myself, what we're running into is that when you learn how to define an edge and learn how to execute your trades flawlessly, what you're now exposed to is the possibilities for unlimited wealth. There's really nothing holding you back. Well, let's put it this way. There's nothing on the outside that's holding you back, but there might be something on the inside that's holding you back. Those things on the inside could be self-sabotaging beliefs, in the sense that if you listed all of the experiences that contributed to a positive sense of self-valuation and all experiences that contributed to a negative sense of self-valuation, that I'm not worthy as a person, I feel guilty about this, and this, that you could end up, you can go plus negative, or net positive or net negative. What could end up happening is that if you don't have let's say the skills or the awareness to realize that as your equity curve, as you start making money, these internal forces, if you have net negative, these internal forces start building up to the point where they'll cause you to make unconscious trading errors, where you're not even really aware that you hit the sell button instead of the buy button. Those kinds of things.